fucking genius. And we've never seen anything like this, where we're all part of it. So here we've got this asset class, which is a globally homogeneous asset, which doesn't exist. Gold is the only one, but gold, if you go to a village in India, the bid-offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage, and it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. Okay, so this is the biggest wealth generating opportunity in all human history. So you've got this in front of you, which is this whole, how to my future. Part of it is this. The other thing is, don't this up. Never get thrown off this horse, because this is the big one. This is the greatest macro gift of all time to get everybody out of this they're in. So it's there in front of you.
According to Real Vision CEO Raoul, cryptocurrency is a globally homogeneous asset. Unlike gold, which can have up to a 50% price difference between regions, cryptocurrency can be traded seamlessly on mobile phones in India, the Philippines, Fiji, New York, Vancouver, and the Cayman Islands. Pal believes that this is an opportunity that we must not miss. He describes this as the greatest macro gift of all time, and it's capable of transforming people's financial futures. This is the chance to escape debasement and inflation. Supporting this is an article from CoinDesk. The article is about how cryptocurrency is outperforming the internet. The cryptocurrency industry is entering a massive growth phase, with Architect Partners reporting that it added over $750 billion in value in the first half of the year. This growth is fueled by a surge in crypto token values, successful launches of spot Bitcoin exchange-traded funds in the US, attracting over $15 billion, and the appreciation of publicly listed crypto companies, adding another $11 billion. After the first quarter, the second quarter saw record high transaction values, with $2.7 billion in announced deals, surpassing the combined value of the previous 8 quarters. With that being said, let's take a look at some clips from Raoul Pal's interview. Please take a little moment to show your support by liking the video and subscribing to the channel. Thanks and enjoy the video.
Yeah, so as I've been talking about for a while, I think we're in that transition from macro crypto spring into macro crypto summer. Now, people confuse it with the actual season itself. I just saw that on Twitter. I'm like, no. It's because it breaks down to 4 periods of the liquidity cycle that drives assets. So the transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. Why? Because that tends to push the central banks into adding liquidity and the governments to adding liquidity. It also happens to be, this everything code cycle is also about the election cycle. And guess what politicians do at this time as well? They want to give candy to the kids. So they're stimulating as well and tend to stimulate into the following year as well. So that particular juncture of the macro starting to pick up, the ISM survey is still below 50, so it's still sluggish. The forward-looking indicators are all very positive and liquidity has been positive for a while. That pickup, if you think of it, we've had a Wall Street recovery, which is liquidity. Main Street recovery is yet to happen. Main Street is when earnings go up, and all of our earnings go up, and there's a bit more money around. That's when the flows from all of these earnings start going into markets as well. So it's not just liquidity and debasement driving things, it gets driven by actual investment money, which has been actually quite lacking in many respects. So that's typical of the crypto summer. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. If we go back and look at all of these, since about 2008, they've all done roughly the same thing, which is presidential election cycle. It kind of has a sell-off into the summer, then it tends to accelerate sideways over the election because everyone doesn't know what it means, and then it's all over, markets rip. Whatever the outcome, a shock, expected result doesn't matter. And so that election cycle has been very prevalent both in equities and in crypto. So that's where we are in the cycle now. So we're just in that zone of, we've got this beautiful chart pattern that is just consolidating. The stuff that has less network traction or network adoption has fallen significantly, but we're starting to see the recovery. So I think it's only a matter of time now before we start to see the next move. And that's also likely to coincide with some other liquidity things. I think the Japanese have to intervene with the blessing of the Fed, because that's going to help the Chinese, the Japanese, everybody's business cycle. That has to come because the US dollar is far too strong for this point in the cycle. The other thing that needs to happen alongside that is the Fed absolutely have to cut. And I saw you talking on Twitter today. Look, inflation, the trueflation numbers are 1.82. Core CPI is now headed lower sharply, but rates are at 5.5. It makes no sense considering the lag that it has. If not, they're going to undershoot inflation, which I don't think they mind, because you can refi debt at lower levels, because they put everything at the short end right now. Janet Yellen's been issuing short end debt, so the lower she gets rates down, the more she can get back into the 4-year cycle. The Fed only operate on two things: unemployment and inflation. Both of those lag the business cycle itself. So unemployment, owner equivalent rents, part of CPI, which is the large part of it, all of that stuff lags by 15 to 18 months. So even where the ISM today is bottoming, that means that doesn't bottom until next year sometime, which is why the Fed are always cutting into the second year, because they're following the lagging indicators, the things that drive down CPI, which is why they're always late tightening. Unemployment, well, you're at the point in the cycle where unemployment ticks up. I don't expect a big tick up, but 4.5 through to maybe upside of 5% unemployment. Well, if you think of how lagging unemployment is, it's about 12 months lagged. So again, that keeps the Fed cutting, even though the business cycle is going to start gaining strength. So you'll have a weird world, and it happens at every single cycle, where the ISM's at 55 and the Fed is still cutting like crazy. And everyone's like, what the hell is going on? Yeah. It's because they just follow those two indicators and they're both lagging.
Raoul Pal discusses the current phase in the cryptocurrency market, which he refers to as the transition from macro crypto spring to macro crypto summer. He notes that this transition isn't about the actual seasons, but about the phases in the liquidity cycle that drive asset prices. He explains that this period is characterized by still disinflationary forces and slow growth, which is favorable because it prompts central banks and governments to inject liquidity into the economy. This phase also aligns with the election cycle, where politicians tend to stimulate the economy to gain favor with voters. Pal also expects interventions from central banks, especially from Japan, which will help stabilize global business cycles. He argues that the Fed needs to cut rates soon because inflation is lower than reported, and current rates are too high, considering the economic lag. Now, let's get back to what Raoul Pal has to say.
So Julian Battelle and myself kind of used the term actually for last quarter last year. We said, hey, listen, liquidity's picking up. The pre-election cycle, it usually goes bananas. And then so we called it Banana Zone. It was the front cover of Global Macro Investor was Banana Zone. And then we started realizing, you know what, the macro summer and macro fall or autumn, that's the massive banana zone. And then you see that beautiful chart of Bitcoin every cycle and it goes vertical. And you're like, well, it just looks like a banana. And the banana zone says everything. It goes bananas, it looks like a banana. It's funny because it's kind of phallic, it's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams, is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit. I mean, I've explained there are two assets in a secular bull market, technology and crypto. Arguably crypto's technology, but that's it. So number go up the most. We've going through the fastest period of change in technology in all human history. We've just brought into the world infinite human intelligence to the power of whatever. We don't even know to the power of what? The power of 10, the power of 100? We've just replaced humans by robotics. We've got cars that drive themselves. We're able to edit the human gene. We've got just La La Land stuff going on, the book of sci-fi novels. And these are companies with products. We're not even talking about them anymore. These are actually happening. And people want to invest in old stuff because, hey, it's cheap here. You're like, what are you missing? Do you really think anybody cares about your gold mine? Really, when you've got what's going on? Now, that doesn't mean all these stocks go up forever. It doesn't mean they don't go into bubble cycles. It's none of that. But it's like, if you are to choose an asset in a highly correlated world, choose the best performing asset. Let's say you don't trade crypto. You're doing yourself a disservice if you don't own technology. And I can hear people now going, well, he's just a bubble. It's all a bubble. You know, you need real cash flows and real this. Yeah, and look what happened to Amazon and Google and Facebook. I mean, it's all mid-curve. And I don't mean that as an insult. We've all been there. It's like once you simplify it all down, stop all of the monkey voices in your head. Stop, filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today.
Well,
I mean, it's really, I've really got it down to the most ridiculously simple theses. And it's embarrassing. I know it's embarrassing because people are like, this guy's a moron. I'm like, I've done, honestly, 35 years of work on this. I think I'm right, but we'll see. And also, look, most regression analyses do 2 points exactly meet? And do they follow each other, the points? Well, if there's any lag leads, all the regression falls apart. It's like my game. I did this. I went to Oxford University and gave a lecture. I was never smart enough to go to Oxford, but they asked me to come and do a lecture at the finance club or whatever. And I turned up, and my speech was, everything they teach you at university about economics is bullshit. And I just showed them. I'm like, okay, so talk to me about your economics models, and they all have these lovely linear models. I'm like, okay, so here's the chart of GDP. What is the feature of GDP? It's like, ask a child that goes up and down. Why do none of your models have an up and down business cycle? They're like, oh. I'm like, if a child can see that the NASDAQ is 97.5% correlated with global liquidity, the probability is that it is.
Yeah.
It's that simple. You can have shark attacks versus cornflake sales. I'm like, do you honestly think we're talking about different things here? It's mid-curving it. It's finding, and I think mid-curving it a lot is fear. Mm-hmm. It's fear. You kind of go out of your comfort zone and you expose yourself to, listen, I've got something really simple, but very powerful. And people just say, it can't be true. Mm-hmm. It can't be true. Now, I'm not the one discovering technology stocks. I'm the moron who discovered them too late. If I'd have just done that earlier in my career, I'd have been a lot wealthier. I was there for the whole internet thing. Missed it all. I was the macro cynic. No, it's a bubble. It's going to mean revert. It's this and that. Wrong. All of it was wrong. Yeah.
Raoul Pal and Julian Battel introduced the concept of the banana zone last year, which is a period of significant market activity driven by increasing liquidity and pre-election cycles. Pal explains that during these cycles, assets, especially Bitcoin, tend to see rapid price increases, which he compares to a banana due to the shape of the price chart. He points out that the current period is characterized by a significant technological boom, with advancements in AI, robotics, self-driving cars, and gene editing. These innovations represent a massive shift, the fastest in human history, and Pal argues that investing in technology is crucial. While some may still invest in traditional assets like gold, the real growth is in technology and crypto. Pal believes that despite potential market bubbles and crashes, the overall trend is towards a more digital future. He encourages investors to embrace sell-offs as opportunities to buy more technology assets, believing that the long-term trajectory is upward. Now guys, if you're watching this video, you're clearly interested in crypto. If you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top-on-chain analysis all in a nutshell. Click the first link in the description to join over 60,000 others in becoming a better crypto investor right now. Anyway guys, that's all for today's video. I hope it brought you some value. I'll see you all in the next one. And as always, all the best.